Tesla just had its earnings and the stock is down 5% or so right now pre-market. And we've been talking about Tesla all week about how strong these order blocks are and why I would not have traded Tesla even with earnings. And right now, these order blocks are probably the strongest order blocks I have ever seen. Now, what are order blocks? These are areas that are full of buyers and sellers who are emotionally ready to get the F out of a stock or get in as fast as possible. So what I want to show you here are these order blocks that were created in December of 2024 when Tesla was hitting its previous all-time highs, right? These buyers came through at the very end, which is so funny because that's what happens at the very end of the big move up here, right? Once they got in, that is when the market turned. Now, these buyers have been stuck here for a good 10, 11 months at this point. And the very first time prices come back to this level, even despite Elon buying $1 billion worth of shares, once it's come back to this level, price has struggled to get through here. Why? Think about it emotionally. If you bought this 10 months ago and price came back after going down 50 something percent, wouldn't you be so excited to move as fast as possible to get out at break even? Yes, of course. That's what these order blocks represent. Now, Tesla has been fighting this order block with how many candles at this point? Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. Today will be the 22nd day that it has been fighting with this area of overhead supply. This is a crucial concept that you need to get familiar with if you aren't already. Overhead supply order blocks will be a difficult area to get through. Does that mean it will never get through there? Of course not. Of course not. You can see just right here when this one ended and then it pushed through. Now you can make your charts look exactly the same as mine. Over in our Discord, we've got a free trading view indicator and you can get the free trading view account. And for free, your charts can look identical to mine. You can see these very same order blocks. And then what's also interesting is that there is now a buyer pool down here. So I would imagine Tesla going sideways for a minute because there are buyers who are going to be excited to buy here and there are sellers who are excited to sell here, which is going to push back and forth, back and forth. And this is already happening with SoFi. This is already happening with SoFi. Now, every time I talk about SoFi, the SoFi bros come to town with their insanely aggressive stance about how SoFi has to go to $100 a share. SoFi is going to do what SoFi is going to do. All you got to do is listen to what the market's telling you. And right now, SoFi, just like Tesla, is bouncing between two order blocks, right? You've got your sellers here, you've got your buyers here. I don't know where it's going to go. You don't know where it's going to go. All you have to do is listen to what the market is telling you. And in this case, I would wait either direction before making a move, right? It's currently in a bullish trend. You got your 10 over 20, price over 50. And if it pops up over this order block around 29.75 or so, then that could be a great trading opportunity. If it goes below this order block down here, that could be a great shorting opportunity. But in the meantime, you don't have to trade this. You don't have to trade this. Same on Tesla. In the meantime, you don't have to trade this. Wait for the market to set up where the easiest thing that can happen, the most likely thing that can happen, is a trend up or a trend down. But in the meantime, you can set your charts up exactly the same as mine for free, and then you'll know when it's breaking through these areas of support and resistance. We can even look at one like Palantir. Palantir, another area, another stock that has a overhead resistance order block that it is struggling with, right? These are real. This is not theory. This is a reality. And it's happening on Tesla, it's happening on Palantir, and it's happening on SoFi. Three of the biggest names out in the market. So I'm just trying to help you out here in the best that I can. So let's do this. What I want to do is I want to go through and answer as many questions as I can to help you out in your trading. So please do me a favor in the chat, put hashtag Q and then any questions that you have, and I'll try to get through as many of them as possible here on the live stream. So let's see. Okay, so Sue has a great question. Sue Keen. OVTLYR swing for stock, OVTLYR active for options. You could do either one. So what he's talking about is in the OVTLYR platform, we have two different sets of indicators, right? You could do let's go to the screener. We'll see what's setting up today. and then we'll look at it from different perspectives. So EIX, let's pop into that one. And so up here at the top, you're going to see the choice, a drop down between swing signals or active signals. You can do either one. What's great about this is that swing signals last a little bit longer and have higher expectancy. Active signals are more frequent, but they have lower expectancy. So you can trade more often, but the average expectancy, meaning the average result, is going to be a little bit lower. Or you could trade less often, with the average result being a little higher. So the choice is yours. So totally up to you, whichever way you want to go with it. And you can get access to OVTLYR for just 82 cents a day. Some people think it costs thousands of bucks. Some people charge that for their software. Ours is just 82 cents a day. Let's see. Buy or sell a losing position on gold. Okay, let's talk about that. This is a great trading psychology lesson. So first, it doesn't sound like you had a plan. Okay. So one of the core tenets that we talk about here on OVTLYR is treating your account as if you are a professional fund manager. Now, a professional fund manager is going to know exactly where he's going to get out before he gets in. He doesn't know exactly what price that will be unless that's a stop loss. But for example, if you're long gold, right, to say, I'm going to get out at $350 GLD. Well, why would you do that? If it's already running and you don't have a reason to get out, you could just continue to let it run. And that's why I say we don't know exactly what it will be on the way up, but let's say that it turns around and you get stopped out of a trade. You need to know specifically to the penny of where you're going to get out. Now, I have a slide that I want to share from one of my mentors. And it is this slide right here. This slide right here. So for those of you who don't know, I was mentored by 5 of the market wizards, Mark Minervini, Tom Basso, Jason Shapiro, Larry Height, and Jack Schwager. Now, I worked with all 5 of these gentlemen. All 5 of them have somewhat different styles. But one thing that they can all tell you is you must cut your losses. In fact, the 3 hours that I worked with Larry Height, 2.5 of those hours, he just drilled in my head, you must take losses. You must take losses. You must take losses. You've got to plan on your plan not going to plan. Okay. So here's a perfect example of this. So if you are in a losing position on GLD, most likely you purchased it somewhere around here, right? And I don't see any problem with that if you knew where you're going to get out. So you buy here knowing that you should get out when the stock does this, when the stock goes down. But it seems like you don't want to. From a trading psychology perspective, this is super normal, but what we teach around here is not normal. And you don't get out because you're afraid that it's going to turn around and go up without you. And I get that. I totally understand that. But what's going to happen, and I'm not saying that this will happen in gold, but it could, is that it's going to get you caught in this situation. It's going to get you caught in this situation. And it happened to me time and time and time again. Right, I would have bought it. Let's say I bought it on this candle here. And of course, it went up and then came right back down. And I would have my stop. I would have my stop out point, this one. And I would say, oh man, it crossed through my stop point. I got to get out. Oh, but I don't want to. What if it turns around and goes up without me? You know what? I'll just move it down a little bit. I'll move it down 50 cents. I'll give it another day. I'll give it another day. Right. Now I would come up with every excuse and every justification to not take my loss. And what would end up happening is it would get worse and worse and worse and worse. Now, here's the thing is I'm going to tell you to take your loss. And then what's going to happen is gold's going to go right back up. Or I'm going to tell you that this is a great stock and then it's going to go down. Because that's how life works whenever you're on YouTube, right? People only hear what they want to hear, and it's going to end up being exactly that. So as a random guy to the internet, to another random guy on the internet, don't listen to anything that I say. Have a plan, follow that plan. And then once you have that plan, you have the freedom to take just a moment a day and say, hey, does this hit what I need to see to get out? Cool, I'll get out. No, but you have to set your emotions aside to do that. And it's tough. It's really tough. I'm definitely not going to say that it's not tough. Let's see. Senior Wahoo. Well, I just had that slide pulled up here. So let's talk about this. So next year, I will be entering and winning the U.S. Investing Championship in the Options and Enhanced Growth Division. Now, you can join me alongside me at financial-competitions.com. Our plan is to get as many outliers as possible. Let's just do this. US Investing Championship. Our plan is to get as many outliers as possible on this list over here. Okay. So you don't have to go to the money manager vision. You can go down to the US Investing Championship, and you just need a $20,000 account. There is a stock division, and then there is a enhanced growth division, options and futures, right? That's where I'm going to be. That's where I will be at the top. I don't know if I'll get 1174%, but I could definitely see 370. I could definitely see 125 happening for sure. But you don't have to have crazy numbers like that, right? This dude down here, Chinmay, 9.5%. Hang Trend X, 14%. And Surya Ja has two different strategies here. Neither one is all that huge. You can participate in this with us as an outlier. So all you'll have to do is put in your name, and then you must put an association with outlier in for your name, right? Because if we don't see your name here, then we're not going to give you credit as an outlier, right? We want to overwhelm the board with the number of outliers who are going to take over and dominate the US Investing Championship. There's probably 20, 25 people here. And if we could add 20 to 25 people and all of them are outliers, people are going to notice. People are going to notice. They're going to say, wait a minute, something's going on at Outlier. I need to see what that is as well. And I can't wait. I can't wait to have you trade alongside with me. We're going to win together. It's going to be amazing. How often do you check the market on your plans? Well, what's really cool is by, like right now, I'm in plan ETF, right? I know my exit signals in plan ETF. And let's go over what those are real quick. This slide here, plan ETF exit signals. So I could do it right now. Ready? We'll do it together because I haven't looked yet. A Q sell signal. So all I got to do, pop into Outlier, go to the homepage, and I've saved the market indices as my favorites, so I can see it has a buy signal still. So no sell signal. 1020 bearish cross. But we won't really know if that happens until the end of the day. It's unlikely to happen unless there's a huge move down. And even with this giant move down, it still didn't happen. So that's pretty unlikely. And there are no 30-day-old order blocks on top of this. So I'm done. So I'm done. That's it. I know exactly where I'm going to get out. What I was talking about earlier, before I got in. Right. And the way that you do that is you have a plan, you backtest your plan, you prove to yourself that this is a plan that has mathematical positive expectancy. And then all you have to do is execute the plan. Now, the hard part here is executing the plan. We can both agree to that. That's the hard part. But call it right there, my friend. I'm done. I am done. Now, I can check it again later on in the day, but I'm done. Crazy, right? Crazy. All right, so Rick wants to look at the plan ETF backtest, specifically the max drawdown. Okay, let's go over to here. So plan ETF is the plan that I'm in right now. And there are no more trust me bros, right? For plan M, which is our most profitable plan, we have the backtest right here. Over 7,000 backtests. The average win was 7.2% on the stock. Average loss 4.4% on the stock, with a 57% win rate, which gets you a average trade result of 2.25%, including all winners and all losers, 2.25% on any stock on the 7,000 that were tested. Okay. Plan A, still super positive. Where is backtesting for plan A? Here, but it's lower, like I talked about earlier, 1.22. So it's basically half the expectancy of plan M. Okay. Still super valid. But plan ETF, this one's amazing. So in 5 years, going from 100,000 to 954,000 in 5 years, following our simplest plan. This is the buy and sell signals on the QQQs applied to the leveraged ETF TQQQ. And let's see, I don't think I have a max drawdown 27%. Max drawdown's 27%. I couldn't tell you where that comes, but every stock is going to have drawdowns, right? Every stock is going to have drawdowns. And on this one, the win rate is 60.97. So basically 61% win rate with a 2.42% expectancy. Now that's trading QQQ. and then use TQQQ as the leveraged investment vehicle. And that is how it can grow crazy numbers like this. Crazy numbers like this. All right, Rick. Great question, my friend. Let's move on. JG says, could you rehash again the call, exit, roll near earnings? When, if ever, would you hold through earnings? So this is something that Scott, our quant, helped me build up over the summer. All these plans here, plans M, A, ETF, and sit in cash and don't F up your portfolio. All of them exit before earnings. There is no holding into earnings. There is no holding into earnings. There is no rolling into earnings. There's no rolling out with earnings. If earnings are coming, it's closed before earnings because the monkey hammer is waiting just around the corner to take you out. Hey, Darren, first time here. I hope I said good morning to you, Darren. I'm glad you're here, my friend. Let's see. Kyle says, for those in a different time zone, is it really an issue to react to the market and do the trades in the beginning of the day? So that's up to you. Now, I personally only trade the end of the day, and I'm going to show you exactly why. I'm going to switch to a 5-minute chart. And on any stock, every stock, you're going to see the exact same thing happen over and over and over. Hang on. I'm waiting on volume. There we go. Every stock is exactly this. At the end of the day, you get additional volume. At the end of the day, you get all the volume. At the end of the day, you get all the volume. At the end of the day, and beginning of the day, I should say. Beginning and end of the day, you get all the volume. So let's just go through several stocks at random. Right? All the volume comes at the beginning of the day or the end of the day. The beginning of the day or the end of the day. Beginning of the day, end of the day. Beginning of the day, end of the day. Beginning of the day, end of the day. Over and over and over. That is where the volume comes in, is at the beginning of the day or the end of the day. Now, I personally like to wait until the end of the day because A, by having that, I can set my schedule around that, right? I can go and have lifestyle design. That's a huge thing for me. Is I want you to create a lifestyle design that works for you, right? That way you're not stuck in front of the computer all day. Imagine you had a trading plan where you were a swing trader, because people do this, and I don't understand why. You're a swing trader, so you're taking trades that last between 1 day and 1 month, right? Yet you check the market every 15 minutes. What are you looking for? What are you looking? Why are you so insecure in your trading plan that you need to look at it every 15 minutes? And even if you look at it every 15 minutes, are you going to do something every 15 minutes? No, of course not, because you're not that type of trader. Now, if you're a day trader, by all means, that's the fastest way you can lose money besides selling options. Go crazy. Go crazy. But if you're a swing trader and you're trading between 1 day and 1 month, there's no need to be peeking in all day long. So, lifestyle design, like I say, you can check it once in the morning, check it once in the afternoon. If it hits your exit signals, go for it. If it hits your entry signals, go for it. In the meantime, just sit on your hands. It's really hard. I know, I get it. Can you tell us about your vision for an outlier managed fund? So one of the reasons that we are starting the outlier fund, not a managed fund, but the outlier fund, which I'll be trading, and that's the one I'm going to enter into the U.S. Investing Championship to win for 2026. One of the reasons we're doing that is we're creating a public track record, right? This is a auditable, fully transparent, every single trade is going to be on YouTube type of account. Now, this is going to be years down the line, probably 5 years from now, where we have a track record long enough that we can go out and solicit investors. But you know what, Falcon, my friend, we definitely want to have you on the mailing list for when it gets to that point. Let's see. Janine is new to the stock market. It's just really vibes trading, isn't it? I don't know. Maybe. But you know what I like to do, Janine, is I like to look at the stock. So I'll take a look at the stock. We'll look at AMD. And a stock is going to tell you which direction it's moving. Now, the way that I look at it is if it has the 10-period EMA over the 20-period EMA and prices over the 50-period EMA, that is what I call the outlier trend template. It is a bullish trend, right? This is the direction it's most likely to continue on. Does that mean on any single day that it will continue to do that? No. But every time it makes a big move, your 10 will be over the 20. Price will be over the 50. This is a Mathematical guarantee. I guarantee if you have a big move, your 10 is over the 20, price is over the 50, because it mathematically has to be so. And I also guarantee if you're in a big nasty down move, the 10 will be under the 20, price will be under the 50. Okay. Now, as far as the vibes go, people get greedy, right? People get greedy, and that does drive prices. You're totally right on that. Your job as the trader is to trade with the people who are looking to sell and trade with the people who are looking to buy and repeat and repeat, right? And one thing that I say, and I say it all the time, is that all stocks are bad, but every once in a while they act right. Now, what do I mean by that? That's what the market cycle gets into, right? And you're totally right on the vibes, right? The hope, optimism, belief, thrill, euphoria, complacency, anxiety, denial, panic, capitulation, anger, disbelief, and depression. Those are all kinds of vibes. Now, how do we identify those vibes? Well, stage one is this sideways action. Stage two is the big, beautiful uptrend that everybody wants to be a part of. Stage three is where the moving averages are crossing over. And stage four is when it's trending down. Now, you're probably thinking, you know what? That's just theory. That's not reality. Baloney. That's not reality. Here's Tesla. In 2024 and 2025, did exactly this. It's like going to the optometrist. Which is better, number one or number two? Number one or number two? Let's look at SoFi. SoFi. Which is better, number one or number two? Number one, number two. Let's look at AMD. Number one, number two. Number one, number two. This is not theory. This is reality. This is what the market does. This is what the market does. Gene asks, can you trade stock and options in one account? Yes. That is this enhanced growth division. You can do anything in that. We actually watched there's a little video, and we watched the video here where he talks about it. He's like, yeah, just it's anything you want to trade, options and enhanced growth, go for it. That's the division we're going to take over. Well, I make a video on the full trading plan. Luke Newcomb, I make a daily video on the full trading plan. So the afternoon live streams are invitation only for members of OVTLYR, but we do have the replay go live, the following day. And on those, I go through the plan, top to bottom, in and out. There's nothing I leave out because I'm as transparent as you could possibly be, right? I'm not one of those YouTube gurus. It's like $75 in this one stock will make you a millionaire. Holy moly. I don't know how they can I don't know how they can sleep with themselves at night trying to scare people so bad with the FOMO to get into stocks, right? The market's either trending up or trending down, right? So let's dig a little deeper into that. The market's either trending up or trending down. You can find a stock. I'm picking one at random. I have no idea if BSX is set up or not, okay? Ooh-hoo-hoo. Hold on a cotton picking minute here. Did anybody else see what I saw? All OVTLYR 9 is lit up. All OVTLYR 9 is lit up. This is great stuff. All OVTLYR 9 is lit up. Now, why does that matter? 40% of the market is, 40% of the move of your stock is due to the market. With the trend of the market trending up, the market having a buy signal, and the market breadth, meaning more buy signals than sell signals have come through, okay? 30% of your move is due to the sector. If this sector is getting more greedy and breadth has also crossed over, that's 30%. So that's 70% before we even get to the stock. And then on the stock, we want to see the trend. Remember, we talked about that, the 10 over 20, price over 50, getting a buy signal like it did today, the fear and greed rising on that stock, and then no outlier blocks in the way. Now, it does have one up here. Maybe it's got a little bit of room. Usually that's a 2% buffer zone right there. That is what we're looking for, my friends. All OVTLYR 9. There could be some really, really, really solid trading opportunities that come through here in the next few days. Now, of course, you're going to need OVTLYR. It's 82 cents a day in order to get access to this, so I don't want you to miss out. But yeah, all OVTLYR 9 is a go. All OVTLYR 9 is a go, but no healthcare. But no healthcare. Oh yeah, that's why these so-called gurus are getting strikes now for setting those unreal expectations. Yeah. And here's the thing. We don't need to set any sort of expectations on the stock. In fact, I would tell you specifically not to do that. In fact, I have it written down. I literally will tell you exactly that word for word. Hang on, let me find the slide. Here. There are no expectations on the outcome of any one individual trade. There are no profit targets. And this goes back to the trading psychology. We talked about this earlier, right? You just have a plan to get out when one of your exit signals is hit, and that's it. That's it. Because you treat your account like a fund manager. And that is where we aren't normal. Normal people get scared and they got to buy this and they got to sell that, and they don't know what they're going to do at the end of the day, and they didn't know what they were going to do when they got in the stock. But a fund manager, which you are, if you are managing money, you are a fund manager, knows exactly where they will get out before getting in. I want you to always, always, always treat your account like this. Let's see what the next question is. Okay, Jax has a really great question here. What is a good platform for trading options? Schwab and Webull don't seem as robust as what I see when you do it. Okay, so we have a partnership with the firm TradeYR. So definitely recommend that. That's the one that I'll be using in the U.S. Investing Championship is TradeYR. I also have accounts at Tasty Trade. I've had those there since 2015. I have also been through multiple brokers. This was years ago, before 2015, obviously, that were horrible, horrible for trading options. I personally don't have any recommendations other than those two. But if I were to give you one, I would say go with TradeYR, because that's the one that I am using on a daily basis in the live streams, and the one that I'll be using in the U.S. Investing Championship. And actually, I forgot, we actually have a deal with them. If you go to that site, trade.tradyr.com/outlier, they have a really cool plan. If you are an Outlier customer, and you open an account with TradeYR, I believe they refund you? They deposit into your account $150. Hang on. Before I speak out of my backside, let's just go to that site real quick. Trade.tradyr.com/OVTLYR. Okay. Before I speak out of my backside, let's just confirm that. Zero commission trades on award-winning brokerage gets 6 months of zero commissions plus $150 reimbursed. There you go, for Outlier customers. There you go. That's the one I would go with. That's the one I would go with. Hey, there's me. What a handsome guy. That's the one I would go with. Okay, let's keep going here. Is average expectancy a percent per day or per trade? So it's per trade. It's per trade. So let's go to those slides real quick. And let's go to plan M. Here, backtested data. There are no trust me bros anymore. Everything that we do is data based. Okay. Over 7,000 trades. Average win 7.27%. Average loss 4.4% with a 57% win rate. So the average trade result, including all winners and all losers, was a positive 2.25%. Now, you're probably thinking 2.25%, that's not very much. Okay, sure. What is 2.5? Let's run the math on this. Let's use an example. I'm not giving you trading ideas or advice or anything like that. Let's just use an example, okay? AMD. Let's do AMD. AMD's current price is 231 on the nose. So 231 current. If AMD goes up 2.25%, so we do this times 1.0225, it would go to 236.19. Okay. And that difference is how much? $5.19. Now, if I were to go into AMD and trade it, on AMD now, let's say I went with November 14th. Let's say I went with the 80 Delta. Let's say that I got the $36 one right there. No, actually, I wouldn't go with that one. I would go with the one right below it, the $32 one. I wouldn't go with that one either. I would go probably this one here, the 210 strike. Yeah, the 210 strike. 27.85. So if I paid 27.85 for that option, okay, and it has a delta of 72. That means for every dollar that the stock moves up, it'd go up 72 cents. So this times 0.72. Okay. So my option would increase by $3 if AMD goes up 2.25%. Now, if I purchased it for $27 and it went up 3.74, that means my return was 13%. 13%. So the average return applied to this one trade. Now remember, this is average. There are losers embedded in this. There are winners embedded in this. The average return applied to one trade, as an example, would have been 13.44%, not 2.25, 13%. That is the power of the leverage of options. Isn't that cool? Isn't that cool? Do a thumbs up emoji in the chat. Do a thumbs up emoji in the chat if you like that, because I like that. I like that a lot. Okay, Sue says close 1 month before earnings. No, just the day before. Just the day before. So Squat Toast. This is a great question. Does the bookmarklet tab I have set up update as you make changes to the product? First, the bookmarklet was created by one of our customers, VacLab. He's an absolute genius. Because of that, this is not an official OVTLYR code. Because it's not an official OVTLYR code, we aren't going to service it. So that's completely up to VacLab and his discretion what he's going to do. So that's the best I can tell you, my friend. What is your view on trading with margin versus just cash on options? So okay, let's establish a few terms. A margin account allows you to trade a lot easier, right? Generally, they afford you 4x margin. What does that mean? That means if I put 100% of my account into one trade, got out, and immediately got into another trade, got out, and immediately got into another trade. So I'm 3 trades deep, got out, and then immediately went into a 4th trade. That would take 400% of my account value. That would be the full margin of that account. And generally, there's no charge for that, as far as I know. Now, I could be wrong, but there's no charge for that. We're just getting into a stock, out of a stock, and you're not waiting on settlement. So settlement used to be T+3. I got in 2009, I got a free ride violation from the SEC. It was great. My account got locked for 90 days. It was amazing because I had no idea what a free ride violation was. And you get that in a cash account. So a margin account and a cash account are 2 different types of accounts. With a cash account, you have to wait for settlement to happen. It's T+1 now, but it used to be T+3, which super sucked. With a margin account, you can go up to 4x, 4 times, without running into any settlement issues. Now, of course, your broker is going to be different from anybody else, so consult their documentation for that, okay? If we're talking about trading on margin, that's different than a margin account. Trading on margin means, like, if you have a $10,000 account, a lot of brokers will double that. And they'll say, you know what, bro? We think you're good for it. You've already deposited 10 grand with us. We'll give you another 10 grand, but it ain't going to be free. It ain't going to be free. We're going to charge you margin interest to trade on that. So let's say that you wanted to buy a stock, and this is on stock. On options, you don't generally get afforded a margin like this, at least not in any account that I've ever had. It's always been on the cash balance that you have. So let's say that you wanted to buy $10,000 worth of stock. I'm sorry, $20,000 worth of stock, but you only had 10 grand in your account. They're like, sure, no problem. Go buy that stock, my friend. Have a great time. But don't forget, you're going to owe us interest on that. You're going to owe us daily interest on the amount of margin that you take out. So, in my opinion, I only trade options. I mean, I do trade stock when needed, right? Like TQs, things of that nature. But I'm only doing it up to, and that maybe that's where your question was going. I'm only doing it up to my actual cash balance. I'm not going on margin for TQs. I don't know if that was where you're going, but that was actually a really good follow-up there. I'm not going on margin. Kevin, good to see you, my friend. Where would you define your exit on that trade? Where would I define the exit on that trade? Okay, cool. So let's get back to the exit signals on Plan ETF. Okay, Plan ETF. I know exactly where I'm going to get out because I'm waiting on a sell signal. When the sell signal comes through on QQQs, that is when I will get out, right? The sell signal, we'll go over here. I know exactly that when I see the 10 or under the 20 on the EMAs come through, That's where I'll get out. And lastly, if an order block is hit, that's where I'll get out. So that is me predefining my risk. That is me predefining my risk and knowing exactly where I'm going to get out. Would OVTLYR consider doing partnerships with Robinhood or IBKR for those who can't use Tradier? Freaking yeah. If you know somebody at Robinhood or Interactive Brokers who wants to work with us, send them my way. Send them my way. Give them this email, support@ovtlyr.com. We would love to partner with them. Like, not even a joke. Let's make it happen. Ooh, this is a great question. This will be our final question because this is such a fantastic question. So before Mr. Ghetto, before Mr. Ghetto, I would like everybody in the chat, if you have rolled options, to type the word ninja. To type the word ninja in the chat, because rolling in options is the most ninja hack that I've ever seen. It is such a cool way to completely change the game. And Dr. J, Ozzy Ian, and several of our outliers who are here, share a little of that experience with us in the chat if you don't mind. Because Dr. J just rolled gold 10 times. Ozzy Ian rolled silver, I believe, 8 times. Like, these guys took this to a new level. I've never rolled it that many times. Never, not ever. But I learned this from Mike Khouw, Mike Khouw, CNBC. So this guy right here, I have a love-hate relationship with Mike Khouw. So years ago, he was on a show on CNBC called Options Action, and I used to watch it. And one day I decided to get into a Twitter argument about a trade that he was proposing. And I'm like, no, man, this is a terrible trade. And I went back and forth several times. And he's like, well, if you're so smart, why don't you, come down to Austin? Let's talk about it. I'm like, name the date. Let's make it happen. So I drove my happy backside down to Austin, met with him at a Starbucks. And we had the conversation, talked about lots of different things. And one of the things we talked about was rolling options. Now, the reason I say I have a love-hate relationship with him is because he gave me the rolling options. But this is around the time that I was starting my podcast. It was somewhere around 2017, 2018. He's like, listen, don't do it. Nobody's going to listen, right? There's plenty of other podcasts about trading stocks out there. Okay. Just don't do it. If I had taken his advice, you and I would have never connected. So first off, thanks, Mike. Second off, go jump off a bridge. All right. That's what I say. But to this point, what does rolling an options mean? Rolling an option. Let's go to the slide for rolling an option. So every time that you are in a trade and it's working for you, let's see if I can find Dr. J's reply. Dr. J, did you put in the chat anything about your trade? I would love to showcase you, my friend, because I think that is such a cool thing. Longer expirations helped me out here. Still had 3 weeks to get out. Yeah, outstanding. Okay. So Senior Wahoo rolled NVTS for 354% profit. Papacito's here. What's up, dude? Lots of ninjas in the chat, by the way. I don't know where you guys hear, ninjas. How dare you? How dare you? All these ninjas up in the chat. So when a stock is moving in your direction, let's look at gold. Now, I have a reason that I want to look at gold because Dr. J, Ozzy Ian, lots of outliers killed it in gold. So the buy signal came through. Remove all my drawings here. The buy signal came through on August 26th. So we're going to mark on here August 26th. Now on August 26th, and I didn't take this trade because it didn't fit my trading plan. The 10 was over the 20, price was over the 50. Now I did have this order block up here, so I personally would have waited until it cleared it on August 29th. But again, we're just going to measure from the buy signal. That's all I'm trying to show here. So let's say that we opened it on that date. All right, let's say we got in at 312. On that date, the ATR value, the average true range was, let's choose round numbers here. It was $3. It's a little bit less, but we'll use round numbers here. It was $3. So for every $3 that it went up, we could roll our option. Okay, so let's mark that on the chart. So 312, 315, 318. Now keep in mind, we can't see the future, right? Only Nancy Pelosi can do that. But what we can do is have a plan so that if a trade is working, we can be incredibly defensive, offensive, incredibly amazing at the same time. Now I'm going up every $3 and adding these ATR lines. We'll just stop right there. We'll just stop right there. You get the point. You get the point. It can just go and go and go, and did. This is crazy. What a move that was. Man. Okay. And of course, you can get access to OVTLYR for 82 cents a day on the annual pass, and you could have gotten this signal as well. But every one ATR that it moves in your direction, so every one average true range that it moves in your direction, so let's say right here around $3, for every $3 move it goes in your direction, you can roll the option. But you have to ask yourself, can I roll up and or out for a credit? So let's go into GLD. Kenny Wahoo rolled gold 6 times, by the way. Outstanding work. Don't be offensive. Can't help it. I'm on YouTube. I offend everybody. That's what I do. What is the number for ATR name? I don't know what you mean. It's the ATR? But I use just the general 14-day default periods. So let's say that we got... I'll pick one at random. Let's say that we started on this option right here, okay? And then every ATR, so every $3 it went up, we could look to roll it. Now, rolling means we purchased it here at $3.59. It's gone up in our direction, so we can do the following. We can take partial profits, we can keep the trade alive, and we freed up capital that we could trade with. So the way that you would do it is you would sell to close the original position. So we're in the 359, so we would sell to close. Then you'd go closer to the money. You want to have lots of liquidity here, so maybe we go to the 364. And in this case, we would take in $4 of credit. Okay, so can you roll up closer to the money for a credit? Yes, in this case. Now, if we get too close to expiration, and too close to me is within 1 week, you would need to look to roll out. So you go from the 359 to the 364, but you'd be jumping expirations to do that. If you do it and it results in a debit, you have done it wrong. You have done it wrong. Now, here's the point. Why not just sell a portion to lock in profits? Let's say you had 10 contracts. Let's say you had 1,000 contracts. Doesn't matter. If you sold for a profit, you no longer have that many contracts on, right? Here, we're taking the same number of contracts and going from A to B, strike A to strike B. We're taking in that much in credit, in this case, $4 of credit for every contract, okay? That $4 in credit is partial profits. You just took partial profits right now. And you get to keep the trade alive at your full size. At your full size, your trade is still on. So it's one order, sell to close the original position, buy closer to the money with the same number of contracts. And you need to make sure you have lots of liquidity for that. Takes partial profits now, frees up capital, and it keeps the trade alive. It is one of the best ninja hacks that I've ever come across. Milan knows. Milan knows. And yeah, you might have to pay commission. I saw somebody else talking about you may have to pay a spread on it, right? On the bid-ask spread. But you know what you do get to do that you don't get to do otherwise? You just took partial profits out of the market. You have those profits in your bank account today. You could go out and buy whatever you wanted to with those partial profits, and you are still long gold. Now imagine doing that 10 times over. Imagine doing that 10 times over. Because after you do it more than a couple times, after you've done this more than a couple times, do you know what actually happens? After you've done it more than 2 or 3 times, generally around 3 times, your trade is 100% risk-free, guaranteed profits. What did he just wait? This random guy on the internet with only 40% of his hair just said, what? By the way, what we do here, this is not normal. This is not normal. This is the difference between somebody who's going to try and FOMO you into a stock and a professional fund manager. Okay. We are professional fund managers around here. I'm trying to teach you how to act like one and treat your portfolio like one. After you've rolled it a couple times, maybe 3 times, you have a 100% risk free, guaranteed profit trade. So Dr. J says he's used the Costco TV example, and it's so effing awesome. People love it. Let me try and do my best explanation of this. Imagine you bought a Costco TV, right? And you get it home and you watch it and you've enjoyed it, and then you take it back to Costco and you're like, you know what? Nah, I'm done with this TV. I don't need it anymore. And Costco's like, what's wrong with you? Keep the TV, and let's say you paid $1,000 for the TV. Here's a couple $100. Keep the TV. Take a couple $100 and go back home. Wait, what? You mean I get to keep the TV and I get to take a couple $100? Okay, that sounds cool. So you watch it for a few more weeks, right? Maybe you watch the Super Bowl on it the first time, and now the second time you watched all the Disney movies, and you're like, man, those classic 90s Disney movies were so good. They're so much better than any Disney movies today, right? And you're like, but you know what? I don't want this TV anymore. So you go take it back to Costco. Costco's like, no, man. I'm really glad you're enjoying this. Just keep the TV. Here's another couple $100 to go along with it. And you're like, are you sure about that? And they're like, yeah. Go watch the Jurassic Park series and let us know how it does on that TV. Okay. So you go home, you've watched the Super Bowl, you've watched all the 90s Disney's movies, and now you're watching all the Jurassic Park movies, and you're just stuffing your face full of popcorn. Everything's amazing, right? This whole thing is going amazing. And you're like, you know what? We watched all the Jurassic Park movies. Chris Pratt was pretty cool. Jurassic Park 3 was terrible. I'm not so sure about the new movie with Scarlett Johansson. I think I'm gonna take it back again. You take it back for a third time, and they're like, listen, stop bringing it back, okay? Every time we bring it back, we're just going to tell you to keep it, and we're going to give you money to keep it. Are you sure about this? And the Costco guy's like, bro, I have told you enough times. Stop coming in, okay? Okay. So then you just repeat it over and over and over. Eventually, you've made enough money where the TV's free, and you're like, wait a minute, I just hacked the system here. Right? My friend, let's say that the Costco guy, his name is Tyrone. He's got some big dreadlocks, right? And he's like, are you seriously coming back in? Right? He's one of those guys that looks like he used to play in the NFL, right? He's super stout. And he looks at you and he's like, are we doing this again? And you're like, yeah, let's make it happen. So Tyrone's like, fine, here's $200, get out of here. And you're like, I hacked the system. All I got to do is show up every 2 weeks, take $200 out from Costco. Tyrone and we become like a little symbiotic relationship here. I walk in, he gives me money. I walk out. This is amazing. And then eventually you walk in and you're like, you know what? I got my exit signal. I actually don't want this TV, Tyrone. Seriously, keep it. I'm not bringing this home again. And Tyrone's like, fine, dude, I don't care. But in the meantime, you have booked so much profit all the way up by just rolling and rolling and rolling and rolling. How cool is that? That is why I like to say this is one of the greatest ninja hacks I've ever come across. One of the greatest ninja hacks that I've come across. Now, it only works if your stock's trending, right? If you're getting into it and it's bouncing back and forth like this, it's not going to happen. But it's only when you find those big, beautiful moves can you do it. And boy, can you do it over and over and over. Pretty cool, right? Listen, if this has been helpful, I would really encourage you to share this with somebody that you think could use this as well, right? This is my job in life is, and I love it so much, is to share the good news of trading. I love it so much. This is why I was put on earth, is to help as many people as possible become successful traders. I am a professional YouTuber, a professional fund manager, and a professional friend to you. So do me a favor and share this with somebody who you feel could definitely use this. And in the meantime, if you're looking to save time, make money, and start winning with less risk, click one of these 2 videos, and we'll talk soon.